according to financial inclusion data, about 34% of adults in sub-Saharan Africa have a bank account only. This is nearly half of the global average of 62%. However, 45% of these individuals have a mobile money account, meaning that Africans are embracing and shaping the gap of financial inclusion, readying them for the impact of the fourth industrial revolution in the financial and technological markets. Joining me to speak about the upcoming 28th World Economic Forum on Africa and financial inclusion is Mark Elliott, the president of Southern Africa MasterCard. Thank you very much indeed. You heard the figures there. This continent, unfortunately, is quite a way behind the rest of the world. How do private companies like yours hope to close the gap?
So I think if you just take a look at the trends, I mean, you've got a really population that's exploding in Africa, a real young bulge kind of population coming through, and a lot of economic kind of hardship that remains. So the question is, how can we kind of help and build more inclusive growth, which is really in tune with the World Economic Forum, which is coming up next week. So I think the companies like ourselves are really quite focused on the technology opportunities to try and address some of those trends.
In terms of this technology, there's a lot of talk about the fourth industrial revolution, how it's going to change our world very, very quickly. What particular aspects do you think you're finding in that as you try to get more people into the banking world?
So I think the fourth industrial revolution is very much something which is talked about on the conference circuit at the moment, and that's important. I suppose where we have to start with those the basics. And so right now you just read out some statistics around the amount of financial inclusion, and let's face it, if we're really going to kind of address the needs and reduce the cost of cash, it's 1.5 to 2.5% of cost of GDP around cash. So there's a huge opportunity to kind of displace cash. And so what we're really focused in on is how can we bring more individuals into the financial ecosystem? What do we need to do that is a big question. But ultimately, how can we bring more in? Because ultimately, by more inclusive growth, then we'll kind of create more economic kind of improvement in those economies.
How are you going to get over the problem of the fact that penetration of the internet is still fairly low in this neck of the woods? Surely that's going to hamper your efforts.
So I think the one thing we have to look at is mobile penetration. So mobile penetration at the moment across Africa is probably around 43, 44%. We see that growing to about 60% relatively quickly. So you just mentioned mobile money there, obviously mobile being a key word in there. So mobile penetration, mobile is something we can work with. Mobile is a technology which allows us to work with the consumer, and also as MasterCard, what we're also doing, and we've done it here in South Africa, is we've introduced a cheaper cost of acceptance. So you may have come across something called a QR code. That's one of these square boxes with lots of little dots. So alongside about 400,000 physical terminals in South Africa, we now have 160,000 QR codes. And that's a much more inclusive way of a merchant or a retailer being able to, on a sticker, instead of paying 400 euros for a device, actually just providing a sticker and becoming more inclusive, more involved in the economic, kind of realities of banking circles, etc., very quickly. So there are different ways of getting involved.
And with this technology becoming more accessible and ubiquitous, what about, sadly in this day and age, the big threat of fraud? I mean, how many stories do we report on every week where people have found their entire fortunes cleaned out? Fraud. What are you going to do about that?
So I think fraud is absolutely paramount, and it needs to start at the beginning. Now, what we've really focused on is when we think about mobile, we think about the consumer. They're obsessed with the experience and speed. There's two different things, which are the big mega trends. So in terms of experience, when we're thinking about how to improve the payment experience, fraud also needs to become part of that overall experience. So that's why things like biometrics, for example, are a great case study. So instead of maybe entering in a password, everybody's got lots of passwords, they tend to forget them. Is there a way of making that the transaction less clunky so you can use biometrics? So there are lots of smart ways we can leverage technology and new innovations, the fourth industrial revolution, to bring through new opportunities to authenticate customers and displace the fraud, which, as you mentioned, is super important.
Yeah, unfortunately, it's a growing problem for business on the continent. But you say biometrics. What exactly? So, if I'm a trader, say in Malawi, say I want to be banked, and you say, okay, to protect you, we're going to use biometrics. What does that actually mean for me on the ground?
So I think there's obviously different types of biometrics, and we've pioneered things like selfie pay in some jurisdictions. But to your example about the Malawian trader who may not have a smartphone, right, and may not be able to do a selfie. So for him, what we have to do is we have to think about what's relevant culturally. So back to your point, what's relevant culturally to that individual, and how do we secure that payment? And so what we started with obviously things like chip. So the EMV chip, which you see on your card, the world has now gone chip. America was the last country to go in 2017, but now we're globally EMV chip enabled. So for the physical transaction, that provides that additional layer of security. In the mobile environment, there's opportunities also to secure those transactions, and we've started to invest in a lot of companies to ensure that we can give added security protection to our consumers.
And there's obviously a big market out there. I mean, we were saying this morning, talking about WEF, that there's something like 60% of people are in the informal sector in sub-Saharan Africa. But how do you, bearing in mind the lack of infrastructure there is, how do you plan getting in touch with that kind of market on the ground?
So I think what we have to think about is what are the opportunities to really bring technology through to provide that inclusive growth. And so obviously we need to obsess with experience. We need to think about things like financial management and financial literacy. But what we also do is we have to get quite creative about creating new types of ecosystems. So for example, if we wanted to, for example, displace cash in the solar panel environment, we've actually worked a partnership with M-Copa, and we actually avail a QR code on a solar panel terminal so that you can scan that QR code and pay for your, pay for some electricity. So there are opportunities to actually think differently about how we access different growth segments. Another example could be that if, for example, Coca-Cola or a big kind of distributor brand wants to get closer to their market, can we help them sell to the tavern in the township, leveraging electronic means and ultimately starting to decash the entire supply chain? Because there's lots of cash which exists in the SME environment, not just between the consumer and the merchant, but actually in the whole supply chain as those goods come to the shop. So there are lots of opportunities for us to help out.
Another issue that's going to come up at WEF in Cape Town is this African free trade area. It's going to companies like yourself, how are you preparing to take advantage and also to guard against some of the disadvantages of the free trade area?
Well, I think we have to be sure that we focus in on what are the use cases we're really trying to provide for. So if we think about Africa, there's obviously domestic type of payments we're trying to prevail, but also there are things like cross-border remittances. There are huge diasporas across the entire of Africa. So we have to really get in touch with what's the regulatory environment, what's the licensing that needs to take place, and then how can we navigate that so that there are fewer kind of integrations for the consumers that we work with, ultimately to provide on those use cases. So we obsess with the use cases, the experience around those use cases, but obviously we have to respect all of the regulatory kind of things that exist.
Because it could be quite an issue for companies like you who do go cross borders. I mean, in some ways it's like a patchwork of regulations, it's a patchwork of different rules in each country. How are you going to handle that?
I think that at our core as a company, our role is to kind of enable payments, and that's why we've established over the years connection points with over 35 million ATMs and hundreds of thousands of point-of-sale devices and over 25,000 banks. So we're pretty well placed for that kind of global interoperability. And that's why when we think about introducing new use cases like QR codes, we can provide a role of standardization to make sure that there's broader interoperability. And that's something we're trying to pull together with the mobile money companies and the traditional banks so that everybody can participate and benefit from actually working together in a collaborative way rather than working away in silos.
Are you not, you mentioned ATM a couple of times there, you're not concerned? I mean, to my mind as a consumer, a lot of ATMs are disappearing along with bank branches. Is that not going to hamper you in some cases?
I think that ATMs obviously have a purpose because people do need cash at times. So I think that ATMs will continue to proliferate in the right areas. But I think what we're seeing is that the banks are starting to really think about the segments and the geographies that they're trying to service, and acknowledging that ultimately we are seeing this transition as the consumer starts to realize that actually the first digital adoption use case is probably digital banking. So, we obviously are trying to get towards more advanced payments, the Internet of Things, where your wearable will actually, pay for your shopping on the go. But ultimately, what we're trying to also realize is that we need to take the customers with us. And that's why inclusive growth is really important, because we don't want to leave anybody behind.
And you're not concerned, though, that there's still a lot of places in Africa, I hear stories all the time, where people go out on a business trip at night and they a card and people say, oh, sorry, we've got nothing here. No machines, no nothing. You're on your own. It's either US dollars or go home. I mean, isn't that a problem for companies like yourself?
I think the thing is we need to help companies understand that there are opportunities out there to make their employees' lives easier. So I'm surprised still by how many employees actually travel around and have to take cash from receptionists at hotels because they don't have a travel and expense debit card or credit card with them, which then helps the whole kind of T&E back at the company when they get back with their receipts. So there's lots of opportunities, there's lots of products and solutions that we can help companies with, but it's ensuring that we kind of get the education out there and take everybody with us. Lastly,
very briefly, what do you think is the biggest problem you're going to face? I mean, what keeps you up at nights in this business?
I think, cash remains, there still is a use case for cash, and so why, we have to ask the question why. And I really think that we need to create more trust in electronic means. Obviously, the price points and the economics have to work for everybody in the ecosystem. But there's a pain point, and we can solve that, but we need to create that trust with the consumer.
Thank you very much indeed. Well, that's Mark Elliott, the president of Southern Africa MasterCard.